All right, there we go. Hey, everybody, this is Matt Hill. I'm with Knight Energy Services.
Ken Lavin with Winter Mud.
Jeremiah Smith, Trace Management.
And we have our guest in this show today, our Talking Energy Show, our new podcast. And we have a guest here today. Introduce yourself.
My name is Robert Rother. I'm Vice President, Director of Operations for Merica Oil Company.
Merica Oil Company.
Merica
We
Oil.
got another one in here. We were blessed to have Franz Ronnie in here with us the other day and telling us a little bit about Merica Oil. But we have the engineer behind all of this in our studio today. The brains. I have Ronnie's got brains, but come on.
The bigger brains. How about that? The big
guns. Yeah. We've got to be careful, you know. I mean,
you guys are both brains. I'm very appreciative of your endeavors.
Smart, and then the next thing you know, something normally happens.
It's on my card that says, "Hey, what do they like to hear? You're smart."
Remind yourself every time before you go.
Yeah, every time I talk to an engineer, you are smart. I mean, I'm not. I'm in sales. It's obviously that I have found my calling. I like talking to people, so I started up a podcast.
Absolutely. Well, being an engineer, one of the outgoing engineers, I would at least know the color of the person's shoes next to me as I stare at the floor and can't look him in the face.
That's fantastic.
Outgoing engineer.
That's right.
A lot of stuff that we do, we talk about that all the time. I mean, our goal, my goal always has been, and we knew the values, like, man, grab your friends that are the engineers, your friendstomers, your customers, your engineers, your friendstomers, right? Get them out with you to all these events and meetings and introduce them to everybody, because we knew the value of that networking is going to come in handy for them someday. Like, I always want my friends working in this industry, and the more people you know, the better. I mean, they give you guys so much knowledge in college on how to go and do your amazing jobs that you're doing. You're bringing the world affordable, reliable, abundant energy. But man, those soft skills of
they don't. That's the one thing they don't teach, right? I mean, you can do a material balance equation for figuring out reserves for all of these reservoirs and everything else, and the economics and everything. But go have to talk to people. Oh man, tell you what, that's probably the biggest shortcoming that a lot of the petroleum engineering schools have tried to address here lately. And having done some recruiting at a lot of the different schools and everything, that's probably the number one ask from the students is how do I get in front of more people? How do I hone my skills and soft skills? And it's been pretty amazing to watch the way that some of the engineers have developed over the years, and how much extra they'll do, whether it's being a speaker at an SPE forum, like Oklahoma City now, they've got the
they have the symposium now.
Yeah, the symposium, but there's a specific there's the
just
Oklahoma
for the
City
YP.
SPE. Yeah, young professionals.
Yep.
Yeah, the YP.
Yeah,
Developing those young guys to come in and be leaders.
Absolutely. I'll show my age. Aaron Ketter actually helped start that back when I was the SP chairperson.
I don't think he's going to appreciate you saying that either.
That's all right. Aaron's a good guy.
Yeah.
He's been at it a long time, but he's been a really good guy for helping develop some of the younger engineers.
I was actually fortunate enough to be on that Young Professionals and Energy Board a couple years ago. I can't remember who extended the invite, but I had a great time with it.
I think Emily Warner, she does that now, and I know
she's with EOG.
Yeah, and I catch a lot of their monthly meetings from a technical standpoint, trying to keep myself sharp.
Man, the technical talks are very valuable.
They're very valuable, and it's amazing how many folks are really trying to maintain that discipline and everything. Yeah. So shout out to all those guys and appreciate everything.
Yeah, they moved it all online, and they did their best. I'm sure it kind of fell off because a lot of guys go for the networking side of it, but the talks that they've had online have still been quite good for the SPE.
Yeah, it's been really good. So.
Well, that is your, you bring it up, your recruiting and your background, your schooling. Like, how'd you even become like interested in the oil field? Like, where does that come from? Like, what's your background?
Yeah, and so I've had the opportunity to be in the industry now for a little over 20 years. I was a military vet. I was in the Navy straight out of high school. Went and got my official Navy education there and decided that I had to grow up after I got done with that. And so my dad's a landman, grandpa's a geologist, uncle's a petroleum engineer, and so the oil business has kind of always been in my background.
Here in Oklahoma?
Yeah.
You're a home branch right
Robert,
there.
how many of those credits crossed over towards your engineering degree from the Navy?
So I had about 24 credits that transferred over and 0 went towards my engineering degree.
Really?
That's no joke.
So,
That's
yeah.
what year did you get out of the Navy?
So I got out of the Navy, so I was there from 91 to 96.
Okay. Well, just for those listening, I got out of the Navy in '06, and I had 10 engineering credits. It was so I did avionics, and so most of those were towards electrical engineering, but they could be used as your general courses in engineering.
Yeah, so general, I did get the general credits, and so I basically got to enroll as a sophomore.
Nice.
Oh, that's
Okay, good.
nice.
So,
Yeah.
Something to start.
Yeah,
Join the
got
military.
some-
It's
yeah.
great.
Oh, absolutely. That's how I paid for school.
Yeah.
That's awesome.
At OU.
At OU.
How was their program back then?
Their program, so this was back in the late 90s, and so everybody that was in the petroleum engineering department, we had to go through a psyche bell because they all thought we were crazy.
That's no joke.
Yeah,
It
no,
was
but-
legit back then.
I'm telling you what, it was. I think there was only there were 20 people. 11 were foreign exchange students, and then the remaining 9 of us were here getting our undergraduate in petroleum engineering, and 4 of us ended up working for Devon.
They were desperate for people back then.
Well, they were desperate for students, but
Yes.
the industry wasn't desperate for people.
Yeah.
Thank goodness that we went ahead and worked through some of the downturn and everything. And so right when we graduated and got out, right around 2000, 2001, that's right when things were starting to pick back up.
Oh, yeah.
And so we kind of get in on the front of that. So, but now the program was great down there, OU's top notch from petroleum engineering.
Top notch, and
Oh, yeah.
I mean, I am blessed that they have that because of our oil field tailgate parties. I think that's why I'm here now, because of every home game in Norman, we have a giant oil field tailgate party for anybody in the oil and gas industry that wants to come by. It's not just look, I don't care what school you cheer for. If you're in our industry, please come by.
Yeah.
Yeah,
Yeah. All the
industry rather than the school.
Yeah,
There you go.
And all the sponsors get highlighted. Each and every time we do the Fossil Fuel Friday stuff, it's led into this. So I'm very appreciative of what you do, where you came from. Whenever you left school, how did you transition from, hey, I'm a student? Did you have internships?
Yeah, and so I was I was a roughneck during school. So that's so I roughnecked, worked on a workover rig, did some tank battery rebuilds, did some things like that while I was in school. So
Good for you.
I was fortunate enough to have some internships as well. Most of those were with Ocean Energy, and actually they gave me the opportunity to work and go to school. So I worked part-time while I finished up school. So kind of transitioned from being a student over to a petroleum engineer while I was still in school. And so that was one thing that kind of helped really get me into the industry and kind of up to speed. Was a production engineer out in western Oklahoma. Almost all of the stuff that's scoop stack now, I worked previously from a conventional standpoint. It was all of that Woodford, Miss, all of that stuff. We were trying to get past that as fast as possible so we could get down to where the real pay zones were.
That is amazing.
And
looking
so
back.
that's the way that we saw a lot of those unconventional reservoirs is get them behind pipe, because they're shales, they'll stick you. You don't want to get around them. They're always going to give you a little puff of gas. They're going to give you some problems, so get past them. And so we bypassed a lot of multi-billion-dollar
Pay zones.
for lots of years before we turned around and started trying to figure those out.
Now, did you guys ever experiment with it while you were back in the day before horizontal became really prevalent? Did you guys say, man, we're getting some great shows, we're getting oil or whatever?
So
Why don't we check?
one of the first Woodford wells that was tested, it was just perforate and a little frac on it, and they got a little gas out of it.
Yeah.
And then they decided to get out there and tried to do a horizontal. When they first started drilling and completing those wells, they had so much problem with completing those and flowing shale back.
Shale was horrible.
Yeah,
on
they
those
had to
wells.
figure out how to efficiently manage pressure drop and not pull them too hard, because normally you go in there, you'd frack your well, you want to clean it up right away.
Right.
Well, they were finding out that you go in there and you've got that much pressure drop, you're just pulling the formation in on yourself.
Well, all right. So pretend, and actually, you don't even have to pretend. I'm not ignorant. Tell me the old process of how you would do this compared to now. On
Sure.
what you're talking about with the worried about heaving or whatever on the.
Yeah, and so you would go in there previously, and you'd go in there and you'd put your big slick water jobs on these things, you'd flow them back, and you'd try to get as much water off as much as possible.
What do you mean? You open
Dry
it
them
up.
up.
You're
Yeah,
like
you'd
no
open
choke,
it up,
like
yeah.
6'4",
Yeah.
6'4"
Well,
immediately, or
you,
what?
you wouldn't have a choke strategy per se. You try to walk through the chokes as quick as possible. Everybody likes big rates, and so you try to get the big rates, get your water off and stuff like that, and bam,
Get that well paid for.
well bore's full of shale.
Yeah.
No,
And
completely.
then- and
And
then
then
you
I
go-
come out with coal
And
tubing
then you come out there and you would come out there and clean them out, and you might do that once or twice.
all the time.
And you'll pull them back in again, and then finally you clean them out enough, and then they'll go ahead and produce.
Yeah.
The
We
choke
lived on location.
Yeah, the choke strategies now, whether it's in the Wolfcamp, whether it's in the Woodford, whether it's in these other ones, is you used a managed pressure drawdown.
Right.
A lot of the work that we had done at Devon, some folks had gone through and presented that, and you'll actually go through and you'll let the well tell you when you need to open that next choke.
Yeah.
And so you'll do a managed pressure drawdown schedule, and you'll communicate that to the field. You'll know exactly what that needs to look like. And so you actually care about what the reservoir is telling you rather than what the rates at the well are.
Now, when you say you let the well tell you, you mean you're going to produce it until the pressure
Yes.
is done, right? And
You'll produce it, and typically you'll watch your flowing pressures and everything, and you always keep a little back pressure on the well. And once it starts to clean up, the well's going to tell you when it's ready to open up, and when it's ready for that next bump. So
Yeah, it's starting to unload on its own.
You know, I was a directional driller, and it's very similar. When PDCs took over and replaced tricones in the curve, when we first started doing it, we treated it just like a tricone would, where we would just hammer down
Mash
and
on it.
get 8 foot, an hour or whatever it was. And then we started doing the same thing with PDCs, just mash on it, and it would get stuck. The bend would get stuck in the curve when it was trying to get through that first 5 foot. So what we learned is, well, you got to look at what the rock's doing.
Yeah.
And we're doing this whole thing off of differential pressure, which is the difference between on bottom and off bottom pressure. We started using that and lower weight initially until you get that bend through
Yeah, you feather
your
it.
slide.
Yeah.
And then you could hammer down. Now you kind of got a trend, but it was very similar in the fact that you had to actually, unlike a tricone where you just set it and forget it, you actually really had to play with the differential and the weight on bit and several different characteristics to get that thing sliding. And then boom, you're sliding at 80 foot, 100 foot an hour,
yeah.
or even more now.
Yeah.
Back in my day, we were only using 400 psi of differential pressure. We were up to like 1200.
I was
PSI.
underbalanced, whatever.
Try not to wash your motors out at that time.
Oh, or chunk them, yeah.
Or chunk them, yeah, just rip that stator completely out.
The strength of those motors anymore, like we had the tag guys, we had Corey in here.
Yeah, Corey
recently.
Nunez,
Corey
tag
Nunez
motors.
with tag motors. And, the technology, and I talked to him a little bit offline about their power sections and their transmissions. And it's just night and day from when I got into directional drilling 12 years ago. So.
Absolutely.
It's very rapid changing technology. Anyway, sorry, I was only deviating to
No,
say that
that's great.
I experienced the same thing in curbs when you're drilling the wells for these shale wells.
Yeah, I mean, it's definitely its own science right now, right? And so some of the things that we're doing at Merica is a little bit different, right? We're actually coming back. We're looking at things from a conventional standpoint. We're going back into some of these areas that have been forgotten. We've got lots of opportunity out there. Everybody knows companies that have properties that they just don't get a chance to put as much focus on as they would like.
So what kind of things can you pull from your horizontal experience and then bring them back to your conventional, your shale to conventional? Have you looked at that?
Yeah, and so one of the things that I'm really going to be looking at is probably more on the completion side. A lot of the wells were originally completed. You go in there 2, 4, 6 shots per foot. You perforate them, a little bit of acid job, and then you swab on them and you see what shows you get. A lot of these in some of the areas, a lot of them haven't been hydraulically fractured, or they've been hydraulically fractured with heavy gels. And so we know we've got slick water
Gummy
technology
bears.
out there. And so I feel like we've got the opportunity to go back in, take a look at some of these older completions. We know that we're not going to have to put 1 million gallons down there per se. We don't need to do that like you do it on a horizontal. We just need to get in there and make sure we've got good, effective communication with the reservoir. Economics for these wells, I mean, they're only running $400,000-$500,000 from cradle to grave. So 50, 60 barrels a day, man, these things pay off, and they look great.
Yeah, it's going to be nice with back to the old school, just straight verticals. So
Yeah, and yeah, from a drilling standpoint, I mean, golly, they're 5-day wells.
You're having to go open up your old notes.
Yeah, and so
tally book.
When I was a drilling engineer, actually everything I did as a drilling engineer, I drilled up in Wyoming,
Right.
and so we did tight gas sands, and so I drilled vertical wells all day, every day. Drilled one of the first horizontal wells up in the Rockies, and it was a little bit of a learning experience, but fortunately, I've got a lot of that conventional vertical well drilling experience. All of the horizontal experience I've got is typically from a management perspective, so I'm very focused on cost, very focused on how, from a reservoir standpoint, we want to draw the well down, where we're going to place the wells. And so, to your point, you're asking, what can I bring? Some of that is going to just be from an asset management perspective. We're going to play a margin game here, and when you start getting into that margin game, I mean it's all going to be about cost and efficiencies.
I gotta ask a question. You said you actually did drill one of the first horizontals in Wyoming.
Yeah.
Tell me how you did compared to AFE.
It was horrible.
Yeah. I've been a part of a lot of those
It
wells.
was horrible, and
They had no clue what
Yeah.
they were going to spend. They just didn't.
no, we didn't have any idea, and we ran it was one of Baker's first sliding sleeve systems back then.
oh wow.
It was a long time ago. We go in there and we frack, and we're setting plugs with a sliding sleeve system, just to make sure that we had good isolation, because we didn't trust it.
Man.
And we spent buku dollars. Well, this thing is a barrel springs unit was the well. This thing produced like 2 million a day for like 4 years, and then like 10 years later, it's still doing 600-700 MCF just flat.
Where is that? What is TVD on that? Is that on top of the Parkman?
No, and so this is going to be in the Almond Formation, which is in the Mesa Verde. So it's on top of the Erickson, which you have to be careful with because you got a lot of water there. But it's dry gas, and it's like a bar, sandbar formation out there. And once you lay one in there, I mean, you'll drain townships if you do it right. But so it was probably about 11,000 feet.
Okay.
TVD.
What's it going to take to get the Rockies back up and running again?
That's a great question. It's going to take
Is it just logistics and
logistics
pipelines,
and pipelines and
infrastructure?
Regs.
gas market too.
Yeah.
I mean, there's so much gas in the Rockies.
Well, we need to get it over to the West Coast and LNG
Yeah,
plants.
But they're getting what Robert said. There's just not enough pipelines. Everything's kind of isolated, but they're really starting to tighten their buttons on like what you can do, how long you can flare, and how much. They want you to figure out something to do with it.
Yeah.
but
Well,
there's not infrastructure for
Rex
it.
pipeline, they actually converted it from a gas pipeline back over to a liquids pipeline, and they've reversed it. And so
Really?
we used to actually send gas from the Rockies east, Rex east.
Goodness.
And we tried to get into that market over there. By the time everything's done, by the time it's built, by the time everything is rocking and rolling, gas prices go down, and doesn't make any economic sense. But
So some of your first projects are going to be in Kansas. Like where how's their infrastructure on delivery?
yeah, and so Kansas has been explored for a very long time, and so most of the infrastructure there, it's been in place. We're not worried about a lot of takeaway issues or anything like that. All of the oil there, I mean, we're going to be looking low rate, so we already, Coffeyville refinery, we're going to be trucking all of our oil. Gas pipelines are in place, so we're not going to have to worry about flaring or anything else. So.
Man, what a great.
Yeah, yeah. It's one of those deals when you think about the oil industry. Kansas isn't the first thing that pops into your mind, but it's been around for so long.
Forever.
Maybe it should be every day.
Phillips 66 made his fortunes there.
Absolutely. And so one of the deals is between what we're going to be doing up front and trying with some recompletions and new drills, we feel like we've got some good opportunity up there to go in there and continue to not only build a position, but continue continue to grow that over time.
And then grow it over to here.
Yeah. Speaking of growth, I'm gonna brag a little bit here. What's this?
Oh, you guys are in the American Oil and Gas Reporter now.
Yeah.
Y'all are in the Reporter?
We
Y'all
are
see
in,
this?
we
Hold
are
that
in
up
the
there.
Reporter with EOG, with Devon, with some of the big guys out there. We went in and had a conversation and just tried to talk a little bit about how we're different and how we're going back in, taking a look at some of these areas that have kind of been passed over, if you will. And Franz, he took opportunity when there was a downturn and everything, and so being able to go in there and just be strategically positioned and make those kinds of decisions, that's what a lot of that article talks about.
Franz has a heart of gold. He was in here. If anybody's watching this one, Franz was just on a few episodes ago telling us the beginnings of his career in oil and gas, and it's a story worth listening to as well. Whenever I see what you guys are doing, I mean, it just it just makes me keep thinking we're all talking about as an industry. The regulatory side of things, the political side of things is pushing our industry away from drilling horizontally and fracking. I mean, do you think it's going to go back to a traditional just by force?
That's a good question. I mean, I think that the administration is going to get exactly what they're asking for, and they're probably going to be sorry for it. However,
High energy costs,
right?
which hurts everything.
Well, that's how they promote the electric Green New Deal, right?
Which that's great. I'm glad. I think it's not a single answer. I think it's all of the above. But guys, hydrogen, electricity, all of that, none of that's made for free. None of that is magically just pulled out of the air. Wind energy and everything, that's great. I think it's great.
All energy is good, but what's the cost?
But what's the cost?
Yeah.
And what's
the cost in my pocketbook as a businessman to run a company? How much is my energy cost?
The energy intensity that it takes to charge batteries, the energy intensity that it takes to build windmills. I mean, all of those things. I mean, those blades on those fans, they're not made out of
sunshine and rainbows.
That's right. I mean, the energy industry needs to just be all encompassing. We need to do it responsibly.
And
I think we do it the most responsibly.
Yeah.
I think our particular brand is, hey, we know that if any waste at all, if it happens to be environmental waste or whatever, that affects our pocketbooks.
Absolutely.
The flaring, we all know that's a problem, and we don't even think of it we just think of it financially. Like, man, all that flaring could be $1 in somebody's pocket.
Or a community,
our
like you
investors.
mentioned. You mentioned about the community, bringing that flaring back to small towns and whatever else, trying to use it for some kind of benefit for the energy.
Bitcoin mining.
Yeah.
Right?
Yeah.
Hey, speaking of Bloomberg, is that correct? Are y'all about to be on Bloomberg here pretty soon?
We are. Franz is going to do a short little interview there, I believe, on Bloomberg TV here coming up fairly soon.
Really?
Congratulations,
Wow.
guys.
Yeah, absolutely.
Wow.
He's done a great job getting out there in front of everybody and trying to market and trying to tell everybody about Merica. So
Can I come with y'all? I'm just asking.
No.
I tell you what, you talk to Franz. I told him that I've still got a little bit of the engineering mindset. Let me call
It's hard for
Yeah.
us to grab you and put you as a face of this company.
Yeah,
I
let
know.
me-
We have a real live engineer in studio, everybody.
I can't believe it's right here. Hey, we'll send you to
Luckily,
acting classes for free.
luckily, he's a hometown hero that knows everybody in this building. Hey, by the way, once again, I'm going to plug this. Trace, thank you so much for the studio space.
Yeah, we're a little Devon for the most part, so most of the engineering came from,
Hence the hat,
Devon.
man.
Yeah,
That's-
Trace Management does project management for oil and gas companies. So, if you need something that you don't have going on right now, I mean, you always reach out to these guys, right?
Absolutely. I've had the unique opportunity to work with a lot of the folks that are here at Trace.
Yeah.
You worked with Luke.
I worked with Luke. I've worked with Jason. I've worked with Rusty. I've worked with Sharon. I've worked with Prejean. I've worked with basically almost everybody
You're one of the
over the
crew.
years.
Yeah.
And then I'm looking to actually, have Trace help out as we kind of kick this off as well too. So, their expertise and their knowledge in the drilling completion arena, we'll definitely be looking for that.
Yeah, that's great.
So,
Oh yeah, by far. Hence why I'm rocking the hat. I'm just saying.
yeah.
So you guys had some meeting. I keep getting lucky. You guys keep coming through town. So on your way through, I mean, right now you guys are raising capital. You got to do more projects.
That's right. Yep.
And how do you even begin like that process? Like, hey, you guys meet and like, hey, we need to reach out to people that know oil and gas and know our value, and then set up those meetings up. For a lot of people out there, I mean, that's just that's a brand new field for our industry. But we're seeing a lot of guys that are amazing engineers that probably should be out there starting their own oil company right now.
Yeah, and I tell you what, the big thing is it's not just about knowing the industry. It's about knowing your contacts. And one of the big things that we're trying to get out there, and when we talk to people, we're really trying to tell folks how we are going to be, how we're going to try and be different for our investors.
Yeah, you're going to bring money back to them.
We are definitely. I mentioned margin before. And it's not margin for the company, that's margin for our investors.
Yep.
And the structure of our deal in our first fund is something that's not really heard of a whole lot in the industry. I mean, it's a 90-10 split, 90% for our LP for our fund. And that's for the life of the fund. That is not for until 200% of payout and then we back in, right? It's really made for investors. This could truly be a wealth building exercise.
Something for their kids,
That's
for their
right.
families. Yeah.
So you take a look. We've got our monthly distribution charts in there. We feel like that we're going to be viable at $29 or less. Our base case was originally $50. We just went ahead and updated everything to our $65 oil price tag. But we understand that we're going to be playing somewhere in that. In my mind, we're going to be playing somewhere between the $50, $60 range. We're going to deliver returns 30, 40, 50% all day, every day.
Robert, for the people watching, we've got a mixture of young engineers, young sales guys, probably
People that are not even in oil
all
and
over the
gas.
place. Now, not traditionally, but a lot of companies, you can just invest directly in the wells. And you can have working interest or royalty or override or something. And you explain the difference with LPs. They're actually going to own a portion of your company, right? Or that fund, I should say.
They'll own a portion of the actual fund itself. And so the way that the fund is set up, it's a 90-10. So 90% goes to the fund for distribution back to the investors. It's not a working interest per se. It's not you own a piece of this particular well. You own a piece of this asset.
Yeah.
And so for Mid-Con Revenue Fund 1, it's 10 wells, 5 workovers, roughly around $8 million. So with that, you own a piece of all of the workovers, all of the new drills, all of the production, everything that comes from that investment.
Yeah. Allow you to delineate your risk instead of just participating in one well, which, if that one doesn't go that great or
Kind of risky.
yeah, you unfortunately sometimes they're dry or sometimes they don't produce like they're supposed to, but being able to delineate over 10 wells.
Yeah,
that's
absolutely.
nice
And we're going to keep an eye on the results and everything. And if we see anything that's heading south, we can actually change direction. If we're able to go out and secure acreage in another portion, that money, wherever it goes, they have a piece of that action. It is not a specific to you're only in this and you don't get the opportunity.
So much better.
Oh, absolutely.
Well,
So
it just goes back to what Franz said too. Is like, hey, look, it is dependent on the success of our projects for us to get paid. Which means that everybody gets paid whenever these projects kick off. Right.
That's right.
But you brought up that it's $8 million for this first fund. What is the minimum and maximum contribution? I could probably guess the maximum, but do you guys have a minimum?
So the way that this fund is set up right now is that we actually have 50 units out there. So 8 million divided by 50 units, $160,000. That's on a per unit basis, and we've got everything broken down on a per unit income. So we can tell anybody that has 160,000 if you want in on this. If you want 10 units, you want 5 units, you want to fund all $8 million. We know our second and third phase is $36.5 million for phases 1, 2, and 3. I mean, we don't really have a maximum per se.
Right, and you're wanting the LLC, like when you say those units,
Yeah.
but you could put together a group of guys.
Absolutely.
Instead to come up with that 160. You don't have to do it by yourself.
That's
Yeah.
right.
You just form
Hey.
an LLC, incorporate.
Everybody pitch in.
Some type of incorporation. I shouldn't say LLC,
Yep.
and then get your funds and get it over there.
That's a great point. And we've seen a ton of engineers that have done that. Trace is somewhat similar to that too, when they kind of start and just guys coming together, making an awesome company. But in the same instance, y'all could do an investment and actually.
Yeah, from a vehicle standpoint, investment vehicle. I mean, it can be an individual. It can be a group of individuals. It could be investment fidelity. It could be it could be a church social club. It could be anybody out there. And it's like throwing money into the lottery. As far as everybody puts in, everybody understands what they've got. We're going to make our distributions back to the group, and then it doesn't have to be a certain one person can invest a certain amount of money.
There we go.
Yeah.
So,
There could be some good tax incentives for that as well.
yeah, and so one of the things too is between the IDC, the intangible drill costs, and some of the tax incentives, we actually have a tax worksheet in our all of our material out there as well too. So people can take a look and see how how they can use that from a tax advantage standpoint as well. We've talked with quite a few folks that say, rather than give my money to Uncle Sam, I would just like to be able to do something where I have the ability to potentially make returns and lower my tax liability.
Yeah, they did a great job with tax returns.
That's a real business you just got involved in. You are now a part of the oil and gas industry.
That's right.
Get after it, everybody.
That's it.
Yeah, we need a lot more entrepreneurs out there. And man, if you just have an entrepreneurial spirit, get in touch with Merica Oil. Get in touch with Trace. Man, you come in here, they'll tell you how to LLC up and get after it. I mean, there's just so many ways to roll up your sleeves and get involved with either your money or your willpower these days.
Absolutely.
Yeah.
Yeah, don't hold back. Get in there.
So Robert, you're Merica Oil's everything engineering. Tell us about why you can do that. Well, tell us about your experience.
Yeah.
Yeah, did Devon put you through the ringer on drilling,
Is it
completion,
just Devon,
production?
by the way? Have you worked for a couple others?
So I worked for, so I started out my career with Ocean Energy, which Devon acquired. And so and then almost 20 years with Devon. Devon's a great company. They gave me the opportunity to move around and do a lot of different things. I started off as a reservoir engineer, did that for a couple years, moved over into drilling. I was a drilling engineer, did completions for a while, was an operations engineer. Continued to work around the different areas of the company and the different engineering disciplines. They gave me the opportunity to move into strategic planning, so I did a lot of strategic planning for them. Helped with the divestiture of all of the offshore assets, which was done right before Macondo, which I'm sure everybody remembers. So international offshore did divestitures there. Helped do a lot of acquisitions and everything, and so they gave me the ability to do a lot on the engineering side and then also understand on a strategic mindset. Then moved into management. I was a reservoir manager for some of our joint venture projects. Had an opportunity to work some of our stuff down in the Eagle Ford, the Permian, I've worked almost everything other than the Barnett. The Barnett was the one monster I didn't get to tackle.
Man, I thought all of us got to be in Barnett at some point.
No,
Right.
So I actually worked all of the Rockies stuff.
Maybe you can bring it back, just like
Hey.
you said. That's another area
I
that's
think-
just been overlooked for too long.
Oh, yeah.
Jeremiah,
Rockies
don't look
is
at me
like-
like
No,
that.
I was just thinking you kind of got siloed in like the hardest play, right?
Yeah.
Maybe that's why they put you up there. Barnett, they kind of figured out pretty quick and
Yeah.
knocking
The
out
Rockies
those
were
wells.
just-
But
yeah.
I would actually argue my experience with the other large operator in Oklahoma City that it still isn't figured out. It's definitely gotten a lot better, but there's still a lot to be learned in the Rockies, namely Wyoming hitting that deeper stuff.
Yeah. So all of the stuff I worked in Wyoming was between Rock Springs and Bags. And
Now,
so,
yeah.
okay, so everything I did was north of Douglas,
Okay,
in
so-
Converse and
yeah, so you're over on the other side of Wyoming there.
Uh-huh.
And I was just across from, so we used to fly into,
Casper?
no, we
No.
flew into Colorado,
It's
close to Steamboat.
Yeah, the college town. Ah,
Yeah,
I
can't
was
remember.
just up
Craig,
there.
Colorado.
thank you.
So we
It
flew
was
into
so
Craig,
cold we
yeah,
forgot.
Yeah, Craig, Colorado, and then we would just drive north up to Bags, and that's where our office was
Okay.
at. And then from Bags up to Wamsutter, which is on I-70 there. That's basically the Washakie Basin.
Yep.
And so I worked that area for about 4 years from drilling reservoir completion standpoint.
It would have taken two, but when we go up there, guys, your roads are 5 fingers, and then another 5 fingers, and then another 5 fingers, and eventually you'll see the rig in the middle of nowhere, and you're like, I'm right there. Oh, shoot, I got to backtrack and find my way out of here to get back over there. It's never seen anything like it. and of
to
course,
drive,
you're
takes all day to drive 2 miles.
all day long. And then sometimes you're about out of gas in the middle of the night, and it's frozen, and you're like, forget it, I'm just going to sleep in my truck. You can't do that. You might die.
That's why I always carried a gas can in the
You better
back.
make sure and have a full tank.
I'm not going to lie, like anybody that's in the government, like you're just going to have to forgive me, but there are plenty of times where I ended up using red gas on location to get
Oh,
my,
man.
get my
La, la,
tickets.
la. So you were on the west side of it, west side of Wyoming. Man, there was an operator a couple years ago doing like 32 well pads, like just a monster pad. It was
Yep.
that dry gas, but it's just incredible. I believe it's Ultra. I don't
Was
know
that
if
in Wyoming
So
or was that
that's
down there
in-
by
That was in
Craig?
Wyoming.
So that's the Jonah Field.
Yeah, that Green River Basin, I
Yeah,
guess.
Green River, GGRB, Greater Green River Basin, and so that's around that Jonah Field. You're down to about 7.5 acre spacing down there, and that's all through the Mesa Verde and Rifle, Colorado, just on the other side.
Yeah.
All of that stuff in the Peons.
Yeah,
The peons.
And
Man,
so
I
yeah,
love that.
that was all like 2,000 or 3,000 feet of stacked pay. It's like drilling a horizontal well, but vertically,
No.
because you would complete all the way through that.
But did you not have to isolate the zones?
You do.
Yeah.
And so you plug and perf.
Uh-huh.
You plug and
Wow.
perf the whole way.
We always wonder that when you drive over there and you see all those, you're like, if you just put the rig down here, couldn't you get? That would.
Well, but you weren't able to produce two different formations at the same time, right? Because you had different ownership of those levels. right?
No, typically you could go ahead and commingle a lot of that
You
stuff.
can.
Up there, yeah. And so we would complete in the Jonah Field. I mean, we would complete 2,000, 2,500 feet all the way down. It was like a lateral.
It was like
but-
Swiss cheese.
Yeah,
It was just-
absolutely. So
Wait, can you do that everywhere?
no,
Okay.
just depending on different states and
Yeah, the
regulations.
regulatory environments.
Your regulatory environment, yeah. And if you're on BLM,
Colorado's regulatory shut
Well,
down
they-
the Peons Creek.
They want to
Oh my
know what
gosh.
you're producing out of each rock, right?
Right.
They kind
Of
of
course.
track that too. But if you're commingling, how could you know that?
you can run production tests, you can run spinner surveys, you can do some things to go in there and try to understand if you have different ownership.
Yeah.
Even you can do dual completions. You can run two strings of tubing in some of these. You can do different things if you want to get that fancy. The easiest thing is just to go in and commingle those and just give everybody a fair shake. A lot of the stuff up there in the Rockies is BLM, and so as long as you kind of
Okay.
let them know what's going on,
Yeah, you only had
everything,
one working interest partner.
and your working interest owners to government, and so give
Wasn't there even some where they would actually produce or actually frack a certain section, let it produce for an X amount of time, then they'd move up the hole
Yeah,
and
oh,
do
yeah.
another one.
Yeah,
Then
behind
start-
pipe potential, right? We do that every day, or
Yeah.
Yeah.
Well, there's a lot of that stuff. I mean, that's where I want to go back in, and there's stuff that gets forgotten, right? There's stuff that gets produced, and once it's done, whoever had it before said, "We're done, we're out." And it's like, well, there's 7 more zones behind pipe, guys.
Right.
Yeah.
And they're like, well, maybe so. But
Set a whipsaw, cut a window, let's go.
Well, and you think about it, and
Perforate and frack it.
yeah, how many largely publicly traded companies are going to be out there talking about a recompletion program
Right.
out there?
Yeah,
when they're
and-
going back in and doing that, they're going to get killed because their investors are going to say you don't have anything else to do other than go do recompletions, and so a lot of those just get set in the side.
Yeah, or it doesn't meet their hurdle rates a lot of time
Well,
either.
It-
Okay.
or it
They
doesn't-
want bigger numbers.
That's right. It doesn't meet their hurdle rate from a production standpoint, but it would blow their economics out of the water.
I know, and it's such a cranial rectal inversion infection. They need to do that by far.
Absolutely.
Or no, let the little guys do it. They have a
Well,
lower
I mean,
cost.
That-
Like that's
absolutely.
great for us.
That's what I'm saying.
Sell
Little
that,
guys are-
sell that asset to us.
Let them have the
We'll
big
take
ends
care of
and
it.
we'll take the
Yeah.
scraps.
Yeah.
But they're missing out on a ton of scraps. It's awesome.
Absolutely. Well, I
Guys
mean,
are-
and they don't have the right cost structure for some of that.
Sure.
Right? And so there are some necessities for smaller companies to be able to come in there and do that. Work with folks like Trace Management. Work with folks like Winter Drilling Mud. Get in there, do some of these things at a lower cost, at the correct overhead, if you will.
Yeah.
Play that margin game in some of these areas, and so that's what we're looking to get out there.
I'll
and try to do.
reiterate what you were saying again. Guys, get involved with getting the small group of guys together. I mean, what you're talking about is huge. It's there's so much left untouched.
Oh yeah, absolutely, absolutely.
Man, so if I know much about engineering, the black hole for me is reservoir. Tell me how much of that is a swag when you're doing a reserve report. Tell me about reservoir engineering.
Well, and so, people always joke about engineers. You've got different engineers out there.
Yeah, so drilling coolest and then completion and just
Oh.
you guys get like the reservoir guys, like we're always like we're probably not ever gonna hang out with them. That's what you used to think, right? I mean, it was like they probably don't even want to hang out with
still
us.
what
I'm
we
too
want
dumb to
them
hang
to.
out with them. Still like that?
Yeah.
Shoot.
Who wants to
Sorry.
hang out with the confidence?
Yeah. So
I
a
like
lot
and
of-
that's the most interesting side.
So if you're an engineer and you have to know whether you're right within 5 minutes, you need to be a drilling engineer. If you need to know whether you're going to be right within 5 hours, you need to be a completion engineer. If you need 5 days, you can be an operations engineer. And if you need to find out whether you're right in 5 years or never, you just be a reservoir engineer.
Boy, that sounds like you can make some pretty big bets. And
Well, and so a lot of it is because everything is so unknown, right? I mean, I absolutely can tell you how much a well is going to produce down to the absolute last barrel. And so that's the deal is reserve estimates are just that. There's a method to the madness out there. Some folks are really good at it. Some folks are really lucky at it, and then some folks are challenged. We'll just say.
Yeah.
But from a reservoir standpoint, one of the biggest things that's out there right now isn't so much how good you are at reserves. It's how good you are at reservoir management. It's back to, are you drilling the right number of wells? I think we've all heard of companies trying to put 24 wells in a section when you know that you only need 6.
yeah,
And it's all about what are you chasing here? Are you chasing rate of return? Are you chasing long-term value? Or are you chasing the return on investment? And how do you efficiently employ your capital the best? All of those have got good arguments. If oil's at $100, you put as many in as you try to get it all out as fast as possible. It doesn't matter. If you need to focus on margin, then you try to put the least number in there. Try to do it as efficiently as possible, and just understand that from a long-term perspective, that you're focused on long-term value. So, different markets call for different reservoir management styles, and so I would say that that's probably something that gets missed a lot. Everybody focuses on reserves. Everybody focuses on how can I get the highest IP, how can I get the biggest number out there. That's not always the right answer. And then also one of the last things, if you decide that you're going to grow your company at all costs and growth is your number one edict, then you'll grow yourself right out of business.
Yeah.
Because you just won't be able to sustain that.
And you think that's probably what a lot of our industry's done.
A lot of what the industry's done I've seen is we probably don't have any business drilling additional wells. We probably just need to get better at the wells that we are currently producing.
What is our production rate? I mean, really, we're at 25-30% tops on the wells that we drill. We get 30% back at the most from the
Oil in
resources
place?
down there.
yeah, it's way lower than
It's,
that.
Way lower than
it's
that
high
even.
single digits.
Yeah.
8%.
Oh
It's
yeah.
brutal, right?
Wow.
We have a lot of science to utilize to get those
Absolutely.
numbers back
One
up.
of the best reservoirs that we've ever been able to produce is the Eagle Ford. And the reason that the Eagle Ford's so great is because it's overpressured, and
Wet gas.
it's and the rock is actually compressible. And so think of a toothpaste tube. You can actually squeeze a rock. I mean, you get high double digit returns on some of that stuff. But what happens when you take a tube of toothpaste and you squeeze it in the middle?
Yeah.
Oh, yeah.
How much is left on this end?
Yeah.
Yeah, touche.
And then how much is left on this end, right? The only thing you've done is just squeeze the middle. There's reservoirs out there like that we are finding out that there's so much left out there that you can go back in and redevelop. You can go back in and refracture these. You can go back in, look at secondary recovery and unconventionals. I mean, some of that stuff is been taboo to talk about because it's been too cost prohibitive. Well, a lot of that you have to think about before you even go out and drill your first well. And so, I mean, that's just good reservoir management is something that we're going to have to continue to get better at. So
You bought this acreage. Let's squeeze every last drop out of
Let's
it. Why do we need to go buy?
Well, I'll tell you, it takes
why do
a
we
lot
need to go
longer.
buy more acreage?
So it takes a lot longer to squeeze every last drop, and a lot of times you have investors and they need their payback. So it's, do we open it all the way up now, or there's a real mix to it. And then what about on the other side? You're trying to do a reservoir study and say if we put 5 wells in this section, they should produce this much. How do you factor in undulations, or when you get out of homogeneous rock? Like somehow you guys
there's
went
no
up
such
to.
thing as homogeneous rock, but I appreciate
No?
you thinking that there is.
I've heard the expression before. You tell
I think some.
it's,
I think some geologists gave me an
there should
excuse
be
one
a-
time.
I don't know when you get to a percentage where it's no longer considered homogeneous.
Right.
I know by a technical term, if there's anything outside of it, then it's not. But
Right.
there's got to be some type of number where you're expecting, okay, we've got 30% chert, but we're still in the Mississippi line.
Yeah, and so some of the things that like I'm taking a look at now is what's going to make or break the wells that we're going to be looking at drilling here. Yes, it's going to be the geology. Yes, it's going to be closure. It's going to be structure. It's going to be all of those geologic pieces and parts. A lot of it's going to be how much water are we going to produce along with it, and then how efficiently can we keep our costs down. Is the oil there? Absolutely. Are we going to get it out of the ground? Absolutely. But how much is it going to cost for us to get it out of the ground?
Why is the return? Why can we only get single digits? What is it about it? Is it just how the frac's going to follow the least path of resistance, and so you don't get that other?
This has been our engineering question for every engineer.
Yeah. And so the problem with primary recovery is a lot of times that is driven by solution gas drive, right? So you actually have gas in the reservoir. It's, go open a Coke bottle, and when you see the CO2 come out, that's expanding gas. Well, the same thing happens in reservoirs. You go in there and you have a pressure drop, and it starts to expand a little bit. There's a formation volume factor for different fluids. The higher your formation volume factor, the more compressible that fluid is. And so actually expansion and expulsion of that fluid through the rock is what drives a lot of your primary recovery. And so once that energy's gone, go out there and produce your gas too fast, and you've left all of this dead fluid down there, and it just doesn't have any way to move.
Gotcha.
That's what CO2 is for. That's what water floods are for. That's what all of these secondary, tertiary, improved oil recovery techniques are. What we found out is through the primary recovery mechanism, if you can go down there and do pressure management where you're not producing everything so fast right away and pulling as much gas out of solution as possible, you'll actually produce more. And you can do that by controlling your choke strategies, controlling your pressure drawdowns, lowering line surface pressures, compression projects. All of those things just help continue to literally pull fluid into the reservoir. And so the big deal is pressure maintenance is what's going to drive your recovery.
When you say lower the line pressure, you're saying that ET Energy Transfer, one of them, want 150 psi.
Yep.
And what can you explain when you say lower your line pressure?
Yeah.
Like that you have to give to them. So you
Sales.
run a compressor.
Yeah.
Is what you're saying?
Yeah. So you're
You have to match the line pressure.
Right.
Whatever their line pressure is, that's what you deliver at.
Right.
But to get it to that line pressure, a lot of times you can run I mean, 150 pounds is low pressure anyway, so that's pretty low. I'm talking like 800-900 pounds on a lot of these gas lines, and you want to run your wellhead pressure at 150 pounds.
Right.
Well, you go ahead and you deliver at 150 pounds into a 4-stage compressor. You go ahead and get it up to 800-900 pounds and send it on down the line. What you would like to do is for them to go ahead and take that 800-900 pounds, drop it down to about 250. Either eliminate your compression or let the well just produce against that at a much lower pressure.
So your earlier statement was saying they open it up trying to match that line pressure, and once you lose that pressure down hole, then you're having to use artificial lift or something else.
Artificial lift, secondary recovery. You shut wells in, you let them pressure up, and then you open them up, let them produce as much as they can, and then you shut them back in. I mean, that's just intermittent shut-ins.
Yeah.
So there's lots of different ways that you can produce wells. We just need to find out what's the most efficient.
And it changes by area, right?
It changes by it can change for the same well, just depending on the day. You can have a high line pressure one day. That could kill your well. You got to go out. You got to drop soap. You got to go out and get a swab rig out there. You got to go out and do all of these different things. This is just for the same well that you've produced for the last 5 or 6 years. Every day is a different day. Very rarely do you be able to get on these wells and just produce them the same day in, day out. Some of the stuff that we're doing up in Kansas, most of the stuff, they're on rod pump. Those are a little bit more steady.
I was just going to say that Kansas, luckily, y'all's investment is a great one because of consistency up there.
Yeah,
in that
it's
area.
consistent. We get out there, we've got our pumping units, we've got our pump off controllers out there, we've got electricity out there. We can get out there, we can pump the wells until they're pumped off, let it shut in for a little bit, let pressure build back up, kick that pump back on, and just continue to do that. Saves wear and tear on your rods, saves wear and tear on all your surface equipment. That's how we're going to be able to keep control of our costs, is really try to keep our maintenance costs down, but still go ahead and produce those wells.
Yeah.
So.
Yeah, finding that happy medium production and, having to modulate so much, it takes time to get right. And then it's ever changing. As the wells, get older and whatnot, you have
As
to
the
change
world
that strategy.
That's exactly right. Yeah, and heaven forbid we get back up to $70-$80 oil, because then everybody loses their minds.
I'm gonna lose my mind. I'm gonna be super happy. So, what's your prediction then? End of the year, last day of the year. What's our oil at?
Wait, ask him first because it'll be more funny.
Yeah, I think we're probably going to be in that 65. I think we're range bound between 60 and 65.
Are we gonna go up and then back down? We're gonna go. Hey, I'm just guessing by the end of the summer we're 75.
I just read that the
thought you said
EIA said
100
we
last
had we overproduced a little bit. Like we had some going back into storage.
We'll find out.
Yeah, all we need to do is just have OPEC kind of watch and wake up.
Yeah.
They'll keep that price down.
And hey, and if everybody's watching, man, more than ever, we see this now with that pipeline that, just happened to get shut down the other day, or what's happening in Europe. I mean, we vitally need America to go out and drill and go out and produce oil and gas so that the rest of the world is not dependent on OPEC or Russia. I mean, threats against our liberty and freedom
Absolutely.
control oil, or we do.
Yeah.
The conversation changes whenever we are a net, producer and exporter.
Yeah.
It vastly across Europe. I mean, every place in the free world that needs energy would prefer that they get it from somebody like us, not, somebody that wants to, come in and take their freedoms away.
Absolutely.
Pretty simple.
That's it. Absolutely.
Well, guys, I just, again, Robert, man, thank you so much for joining this conversation about energy. And the Talking Energy Show, we want to highlight people that are doing something innovative like yourself. And, of course, friends of ours as well. But you've come in and proved yourself on and on again. So this endeavor is pretty exciting for us. How does somebody get a hold of you guys to invest in Merica Oil?
We've obviously got some material out here. You can take a look through any of the material. You can get on to mericaoilcompany.com. There's links out there for just about every social media platform that's out there. You can send myself an email, Robert Rother @mericaoilcompany.com. Franz is just Franz Rodney @mericaoilcompany.com. yeah, feel free to reach out, send us emails, any of the social media, LinkedIn. I'm out there on LinkedIn. Franz is out there on LinkedIn. And yeah, just feel free to reach out any way possible out there.
Allegedly, a really good public
Yeah.
speaker
That's
too
right.
that will come and talk
Yeah.
to your group about oil and gas.
Well, you know, I will say that from an engineering standpoint, I will say that I've had the opportunity to actually have to get out and talk a little bit more. So yeah, no.
Thank you. No, I mean we've talked about it oftentimes. There's a vacuum of exciting leaders that want to get up in front of people and talk to them
You
about
should
the
ask
industry.
this though. What's the best type of engineering you should do, Robert? What's the best? Who are the reservoir guys the coolest, or who's the best?
Yeah, I mean now knowing all of them.
In your opinion,
yeah,
not the
reservoir
industry.
guys
You
are
have this
always
chance to
the
change it.
coolest.
That's
Jeremiah.
what I thought.
Facilities.
Yeah, the
Cool.
facilities
Yeah,
guys. Give them a little credit.
I tell you what, the best engineers out there, yeah, they're just all of them. I'm sorry.
I get
I
it.
so thought he was going to say from OU something.
No. See, I even went a little bit above that. I
Altruistic, this
Very
guy.
bureaucratic
yeah,
answer.
absolutely. You know, I'm Boomer Sooner. I love OU, but I've worked and had the opportunity to work with so many great engineers
Yeah.
from so many great schools. I'll say the best engineer is petroleum engineer.
Okay.
There you go.
So
That can huck a frisbee, right? That's a
that
big
can
part
huck
of
a
it.
frisbee. There you go.
Yeah, you guys in your what is it? It's
Frisbee
Ultimate
golf.
frisbee.
ultimate
Yeah.
frisbee.
It's ultimate frisbee. Heck,
Ultimate
we had
frisbee.
another guy this year. I don't know if you know Dwight.
Mm-hmm.
He hurt his shoulder really bad. Had to go get surgery on it. Like, this is dangerous stuff.
Yeah,
It's
I
very
mean,
serious.
I've played frisbee for the last 9 years,
Mm-hmm.
I believe.
I think it's time. I think it's time that
Good.
we open up this frisbee deal again and go down to that park in front of Devon
Yeah,
and
just
throw
go
the
work.
throw the disc around.
They're still
Absolutely.
doing it, just a lot different emails than when I started playing
Yeah,
these.
yeah. Well, I'm hoping to get down there either tomorrow or Wednesday. So
Oh, nice.
I haven't been able to get out so far since I've been
I
back.
see every time Jeremiah talked about it, I was like, I feel like he's in shorty shorts and a headband,
Oh,
and that's about
You're
it.
not wrong.
Yeah,
Just a little white beater on or something.
Yeah.
As little as possible.
Oh,
Yeah.
and do you have the wristbands too? You get the little-
no, that's our show, everybody. We talk about fashion and sports and oil and gas and highlighting people. Hey, so anything else going on in the world in oil and gas before we wrap this
I
up?
don't know. You need to give your disclaimer.
Oh yeah. Hey, a disclaimer: we are independent of Trace Management. They give us this space, and by all means, anybody that comes in here, we're not saying yes or no to their message. We just want to make sure that they get a chance to tell us about their story. And you have a great one. And man, I mean, we could do this another 4 hours easily.
man.
But we're probably going to break out whiskey to do that.
We could swap stories.
Brown water
Forever.
will be on the table at
Yeah,
that point.
absolutely. You know, like I said, family's been in the oil business long enough to where I can talk shop just about all day, every day.
It sounds like it,
We
too.
enjoy it.
Very
Yeah, that's
educated.
I don't know if I have many other subjects to talk about usually. Jeremiah's race car.
Yeah.
That's
Yeah, the
Race
race
last
go.
weekend.
Yeah.
Burned up another engine.
Burned
I
up
know.
Third engine.
You
Yeah.
got to shift.
I'm in
I know.
it.
Yeah.
It's supposed to say it's 7,500 RPMs, right? Do a turn.
I was thinking about investing in that racing team. I think I'd rather put it in Merica World.
Yeah.
Did people come out early to see you before you?
They did.
Yeah.
So it's endurance racing. It's
Yeah.
16 hours. We made it all 15 hours and 20 minutes, and then unfortunately the car petered out right in front of us in the pouring rain. And then even more unfortunately, we got towed in like 10 minutes before checkered. So at least we could have got towed across the checkered flag. We didn't even get that. So
I told you we should have paid the driver $50, to tow him across.
yeah, but it is a lot of fun. Sooner or later we'll get it right.
That's a good deal.
Mm-hmm.
Glad everybody was safe though, at least, right?
Yeah, actually the car caught on fire. Well, it started smoking pretty good. Ken was actually
that
out
was
there
it.
filming us the day before, but when it died out in front, it's pouring down rain. You just see all the smoke billowing under the hood. And we're talking to the driver because it's so sad. We're right there in the pits, hoping to fill them up with gas one more time and
Yeah.
see it. And we just see it die right on the corner. And we're telling him, hey, man, we're calling him on the column saying, man, you need to get out. But
Yeah, the car.
he was right in a turn, so it was a very unsafe place for the car to
get out,
die
yeah.
and for him to get out because these guys are doing 80, 90, 100 around that turn.
Yeah.
So he stayed in there. And
Who was driving at the time?
It's Evan,
Oh,
the
man.
banker. Yeah. So, my buddy lives
And not the smallest person on your team to get out of that car in a hurry.
He actually is the smallest guy.
He is the
I call him
smallest guy.
Littlefinger because of that. He can get into all these tight spaces.
Yeah.
But I'm talking to him afterwards. I'm like, well, I'm glad you didn't. I understand why you didn't get out the driver's side, but why didn't you crawl your skinny ass out the passenger side? You know, He's like, I didn't think about that. Well, I'm glad it didn't actually catch on fire. It just smoked for the next 20 minutes. So, anyway.
Hey, they did a good job on that Saturday, though. Y'all kicked ass, man.
Yeah, it was
That's great.
fun.
Good
It's
deal.
so fun. All right, guys. Thank you for watching Talking Energy Show. Take care. God bless. We'll see you next time.
All right.
Bye-bye.
Thank you.